Hi everyone, welcome back to the Web3 channel. My name is Zach. In this video, we're not going to be looking at Cointelegraph, we're looking at the Defiant as they are going over a really interesting insight, I think, when it comes to NFTs and crypto and how NFTs and why NFTs are sidestepping the current so-called crypto crash. Before we go into this, of course, nothing in this video is to be considered financial advice. You should always do your own research. But with that being said, let's have a look at what they are saying here. In recent weeks, a combination of macroeconomic events has shaken the markets, reminding everyone about the industry's latent risks and ubiquitous volatility. The problems in Kazakhstan around Bitcoin mining made waves, with a new COVID outbreak, the unease about a likely rise in the interest rates by the Federal Reserve, and the latest political issues in Ukraine created a hostile environment, dragging capital markets down. The correlation between crypto and traditional markets made the effect widely felt in blockchain assets, with Bitcoin and Ethereum losing half their value since all-time highs in November. The same goes for Binance, Cardano, Solana, and more, and several other cryptocurrencies performing well. Historically, the total crypto market cap shrunk to 1.6 trillion from 2.9 trillion USD in that period. Looking right here, of course, at Bitcoin ETH price right here, we can of course see the very distinct dip, I guess, and realistically bear run there. Without question, the crypto market is currently experiencing a challenging period. The sentiment in the market signals fear. However, the metrics related to the performance of specific blockchain verticals like NFTs might suggest otherwise. And that's actually what we've been talking about on the channel over the past week or so. So if you haven't already, subscribe to this channel for everything happening in the Web3 space, whether it's crypto, NFT, or metaverse news. Understanding NFT macroeconomics, though. While a group of events have hampered the crypto market, a series of factors have positively impacted the outlook of NFTs at a macroeconomic level. Firstly, the inclusion of celebrities and big brands in the NFT world appears to be growing day by day. Stars with a massive social reach like Neymar Jr., Kevin Hart have publicly announced their recent entries into the BAYC, one of the premier NFT projects. And of course, it's not just Neymar, not just Kevin Hart. We've seen so many. We've seen Reese Witherspoon, we've seen Snoop Dogg, we've seen Jimmy Fallon, Post Malone, so many people. To make the impact even more profound, Twitter, perhaps the most popular social media platform across crypto and NFT enthusiasts, enabled its first Web3 functionality inside the social platform a few days ago. Social media platforms Instagram and Facebook are expected to follow. Meanwhile, retail giant Walmart has filed several trademarks for NFTs. And we can see right here, looking at the Google Trends worldwide graph, we can see it how NFTs has quite simply gone from under actually almost half of the crypto search volume all the way up to literally basically double the search volume. Very huge difference indeed. The popularity of these assets is growing more than ever. For the first time, searches for the NFT are outpacing those for crypto, plus increased interest from Asia is promising. A market dominated by users in NA and Europe will now welcome an Asian NFT audience, and we're going to be seeing more of that, especially with one of the companies I actually make a lot of videos about called Vivia. They have recently started putting out some more Japanese-based NFTs that I think are definitely going to do well in that region. NFTs on-chain metrics to tell a bullish story. NFTs single-handedly produced one of the most impressive metrics we saw in the blockchain industry last year. In total, $25 billion was generated by this type of asset in 2021 alone. That's a whopping 18,414% more than the previous 4 years. More than the 4 previous years combined. While cryptocurrencies are struggling, NFTs appear to be thriving. Narrowing down the analysis to Ethereum, responsible for 75% of the last year's volume, we see a positive trend. NFT sales and the number of unique users have increased in this blockchain, and so too have the unique active wallets connected to NFT dApps, collectibles, and marketplaces. Since December 2021, more than 53,300 UAW has connected to Ethereum NFT dApps on average per day. That's 43% higher than the numbers during Q3 of last year. My quick personal take into account, nothing in this video is ever to be considered financial advice. Always do your own research based on your own terminologies and thoughts and all the rest of it. But personally, my guess is that part of the reason, not the underlying reason, but part of the reason will be because a lot of NFTs are starting to become actual products. Let me be clear, most NFTs are not actual products, I'll be real, but there are, we are starting to see some use cases, which is great. Ethereum NFT, UAW versus Ethereum price. In addition to positive macroeconomic events, NFT's central role in the play-to-earn metaverse narratives has contributed to bullish on-chain metrics. Despite unfavorably cryptocurrency indicators, the search for a decentralized and interoperable metaverse benefits NFTs. Furthermore, as the value of the underlying assets support NFTs is on the downside, individuals might see the negative crypto trend as a buying opportunity. Again, not financial advice. Although January isn't over, unique traders are higher than ever. A record 1.6 million unique traders have propelled Ethereum's NFTs to generate more than $3.7 billion USD in sales, exclusively those on LooksRare, and are on pace to break the record set in August 2021 of 4.5 billion USD. Looking at Ethereum NFT trading volume versus the Ethereum price, and we can see this is this set of on-chain metrics tell the story of adopting a new asset class and the market's positive sentiment. Still, another metric makes even more evident the appreciation of NFTs being floor price. Floor price analysis. The floor price is one of the most important metrics, of course, to assess in an NFT collection, especially from an investor perspective. The floor of an NFT collection is the minimum asking price and represents the lowest entry barrier. The recent floor price analysis for some essential Ethereum collection signals that NFTs behave like assets that store value. A class of assets outperforms important cryptos and even traditional assets like gold or the S&P 500 index, which, if you have been watching the videos on the channel, you'll know, of course, that Kevin O'Leary actually sees a lot of this going into a new sector on the S&P NFT marketplace. I'm assuming billion dollars USD, obviously. We're looking at 17 billion in, is that correct? 17, 15? I'm not quite sure. The value of the NFT space as a whole is increasing. According to the floor price market cap for the top 100 NFT collections, the value of NFTs has decreased by 2.4 billion from November and is currently estimated at 14.8 billion. Okay, so yeah, that was correct then. Despite the 50% hit on ETH, the value of the most traded collections was barely affected by 15%, showing that the category resisted the crash. One of the NFT collections that have had a direct influence on the positive NFT trend is BAYC. At the start of November, when Bitcoin and Ethereum were peaking, the collection's floor price floated around 30 ETH. 1 week later, the BAYC floor increased over 60% to surpass 50 ETH, despite a 15% drop in ETH's price. By the end of the year, the cheapest BAYC could be purchased for 60 ETH, which has surpassed 90 ETH. This means that to buy the most affordable Bored Ape, one would have to spend more than $225,000 at current ETH prices. I remember when, honestly, the floor price on a USD level was literally 100,000. Crazy to see how BAYC has come across. And of course we can see BAYC price versus the Ethereum prices, and we can of course see how different it really has been here. While the most important cryptos have lost around half their value in the last 2 months, BAYC has gained 207% in terms of Ethereum from November 10. Before we go any further, I want to actually ask you the question. I'm not saying that I'm going to give you any input right here. I just want to ask you the question: how do you think Ethereum's price would have been affected, or has been affected even, by these NFT collections? Obviously, we're seeing that BAYC's floor price is up compared to Ethereum's price, but on the same end, how much do you think Ethereum's price would have potentially dipped if we didn't see these collections in place? I mean, to be fair, we probably wouldn't have seen the same relative all-time highs, but either way, I'm getting in different directions here. While the most important cryptos have lost around half the value in the last 2 months, BAYC has gained 207% in terms of ETH from November 10, but most importantly, the collection's floor has gained 14% in terms of the actual value measured in USD. Holding a BAYC from November 10 until today would represent a capital gain of 14%, while holding any of the relevant cryptos would net loss of around 50%. It is fair to say that BAYC has become an asset class that stores value. BAYC isn't the only avatar collection to increase in value. World of Women, of course, another Ethereum avatar collection, has gained 383% in terms of ETH since November 10, gaining 185% in real value over the same time frame. CyberKongs and their Vowel VX versions has seen their floor prices appraised by 27% and 68% respectively in real value since December of last year. The same happens with Doodles, whose floor price has increased its USD value by 224% since November. I need to make it very clear again that nothing that you're seeing on this channel is financial advice. Always do your own research, but this is just what we're seeing right here as far as the stats are concerned. In the case of CryptoPunks, a historically relevant NFT collection, it is tricky to analyze. Even though this collection has not performed at the same levels as its peers, punks have still outperformed several crypto-based assets. The CryptoPunks floor reached 100 ETH on November 2nd and came down to 83 ETH 1 week later. The same day, Bitcoin and Ethereum hit their all-time highs. From that date, the floor price in terms of Ethereum has decreased 9.6%, while the actual value only shrunk to 229,000 from 254,000 USD. Still, it is safe to say that CryptoPunks are assets that store value. Avatars saw their value increase significantly, but NFTs related to virtual worlds and games have performed exceptionally well. That is the case of Forgotten Rune Wizards, whose floor price in Ethereum has hiked to 10% from November 10, and its real value is 152% higher than its December. Similarly, the floor price of Gala Games Vox NFTs has increased 145% in terms of Ethereum since November. NFTs representing virtual worlds have held the value gained from the metaverse hype cycle. Virtual lands in the sandbox, Decentraland, for instance, have maintained their floor price at levels seen after Facebook's rebranding announcement, albeit with a decrease in their real USD value. Meanwhile, the floor price of virtual apartments since inside the World Wide Web has risen 242% in ETH terms since November, despite the negative crypto trend, while Crypto Voxel's floor price costs 17% more ETH than in November. Analyzing a collection's floor price sheds some light on the project's stability from an investment perspective. The recent analysis confirms that some NFTs resist the negative trend across the market. But why is this scenario playing out? Why are NFTs proving to be resistant to changes in the price of cryptos? Why are NFTs resisting the latest crypto crash? The answer to this question is not straightforward, and again, nothing in this video is to be considered financial advice. There is an argument where certain NFTs should be viewed as cultural pieces rather than digital assets, and like certain pieces of art, certain NFTs might be considered real investment opportunities by some people. The first 5,000 Days by Beeples introduced NFTs to a new audience with Christie's 69 million auction. Generative art collections like Fidenza, Ringers, or autoglyphs are being presented as a new ways of expression and worth thousands of dollars. Looking at the top NFT sales of 2021, we saw, of course, Beatport, we saw Human One, BAYC, and BAKC bundle the CryptoPunk 4156, COVID Alien, CryptoPunk 7804, another CryptoPunk, Right Click and Save As Guy, Ringers, and CryptoPunk. In the same manner, BAYC and CryptoPunks reached the mainstream stage on August 23rd. Visa, this was big, and we actually made a video about this, announced the purchase of CryptoPunk for $150,000, solidifying the status of punks as assets to store value. Also, 101 pieces from the BAYC collection were auctioned at Sotheby's for $24 million. For now, just a few collections have reached the status. Still, the potential application of music, tickets, sports, and fashion loom around the corner. All in all, NFTs converge with deep human emotions. Only time will tell whether some NFTs will create a cultural impact that transcends generations. A lot of this actually is what Gary Vee has been speaking about a little bit lately when it comes to adoption for NFTs versus cryptocurrencies, financial markets versus art and community. Utility, one of the essential aspects that successful NFT projects share, is the rewards granted to their community members. Added value or utility inherited by holding an NFT on these projects. Literally what I was talking about 5 minutes ago. For instance, Lava Labs popularized a utility blueprint after CryptoPunk's owners received a free MEBIT, increasing the actual capital gains from the initial investment. The same can be said for projects like Cool Cats, the MetaKey, Doodles, or BAYC itself. Utility can also be found in yield-bearing NFTs, projects that distribute their native utility tokens daily, like the case of CyberKongs and their Banana token. Holders of Genesis Kongs receive 10 daily Banana tokens worth $24 each at writing. A similar scenario is found in the Subducks and the Vault token, as well as in Coolcats and their future Milk token. I'm not going to go through all that right now because we're still quite far into this. Also, NFTs converge with other categories like DeFi and games. A clear representation of the blending between DeFi and NFTs are platforms like NFTFi that allows users to use NFTs as collaterals. The fractionalization of NFTs, or projects like Pixel Vault, whose MetaHero universe NFTs can be staked to farm the POW token. And of course, there is the utterly relevant game element. Miranda's NFTs and Aurore's Villagers have both maintained their floor value despite significant drops in the price of Ethereum, Sol, Gala, and Ori. We also previously observed the appraisal of Forgotten Rune Wizards, another NFT collection with game mechanics. Although it is challenging to keep floor prices on myriad game alternatives, it is safe to say that the demand for blockchain games is on the rise, adding value to these types of NFTs. Then, looking at celebrities and NFTs. Another relevant trend that has positively shaped NFTs is the involvement of celebrities and renowned brands. BAYC started to gain steam as sports superstars like NFL's Dez Bryant, NBA Stephen Curry, Post Malone, Snoop Dogg, the ones who I just spoke about. Eminem joined the elite club. The BAYC community became even more exclusive after welcoming Fallon, Hilton, Neymar, and Hart. Celebrities' positive impact is exemplified by World of Women, a collection that experienced a 250% floor price growth just hours after Eva Longoria announced her purchase. Doodles is another project that has benefited from having renowned NFT personas like Pranksy, Lubify, and Steve Aoki. And of course, Logan Paul has also been very large in this space, and I'm sure we'll be doing a lot more very soon. I didn't know that Gwyneth Paltrow was in. That's cool. In the same way, there is impact of big traditional players. Brands like Adidas, Coca-Cola, Pepsi, Budweiser, and several others have either launched their collectibles or have partnered with important NFT teams to make their dent in the space. The same goes for fashion giants Gucci, Dolce & Gabbana, Burberry, and those who have taken the advantage of the hype. Teams become brands. I do wonder if they're going to talk about VV. It would be very smart too. The teams behind the NFT collections are highly responsible for their project's fate. Surrounding the team with talented artists and experienced developers is a successful recipe that other teams have found. That is the case of RTFKT. Of course, the team behind Clone X is responsible for unique NFT pieces in collaboration with Jeff Staple and Ferocious. The digital design and fashion brand has consistently met expectations and has tackled any challenges and basically it was acquired by Nike. Then we have scarce assets. Finally, there is a scarcity factor, an important one since it relates directly to human psychology, i.e. products. The anxiety of missing out on something, also known as FOMO, is relatable to scarce assets and investment markets. NFTs combine both. Most collections launch a limited supply of NFTs that will remain the same forever, whether it's 10,000 or 20k. The limited supply for a given edition will always be the same. That's the magic of blockchain. The upshot is that NFTs have gradually become an asset class of their own, while the correlation with crypto will remain due to the nature of this technology. NFTs are slowly creating an economy for themselves, one with their macro events and market factors positively or negatively impacting the space. The sum of the previously revised factors such as the cultural value, the added utility, the involvement of celebrities, the brand awareness, and the scarcity of these assets have propelled the latest wave of NFT adoption. Looking at the best part, which is that we are seeing is only the top or tip of the iceberg. Be very clear again, nothing on this video is financial advice. Projects like Lava Labs, BRAC, Cool Cats, RTFKT, Cyberkongs, and Doodles will remain highly involved in the metaverse narrative. The friction and resistance from non-crypto users will increase with the launch of products that reduce customer friction, like the expected coin-based marketplace that will integrate MasterCard payments. There are plenty of potential use cases where NFTs will be embedded in traditional business models. And to be honest with you, from that point, we do need to see more of that happening, but that will happen, I believe. And with that being said, this video is 16 minutes long. I'm not planning to make it any longer than it needs to be. It's been a while. But with that being said, what are your thoughts on everything you've seen here? Of course, please remember that nothing on this channel or video is ever considered to be considered financial advice. You should always do your own research, but hopefully these videos give you some level of idea that you can make your own informed decisions with. That being said, have a great day everyone, and I'll see you in the next Web3 video for NFT news, crypto news, and metaverse news.